We're currently experiencing a very low interest rate climate. How do you operate in such an environment?
Yeah, very good question. I mean, interest rates are very low currently in the most safe havens, like Germany and the US and the UK and so forth. So I tend to stay away from those bonds because even though interest rates might fall even further, as in Japan and Switzerland, there is the risk that they might rise and then I lose money. Okay? But there are other interesting cases out there. I mean, there are still plenty of high yielding sovereign bonds, and some of them are undervalued.
Could you give me an example of an investment case that has worked out particularly well?
Okay. I will give you the best example from the last 12 months. That has been Slovenia. Slovenia is a small member of the European Union, and it's also a member of the Eurozone. So they issue euro-denominated bonds. In October, the market's perception last year, the market's perception was that Slovenia is maybe going belly up. The state, that is, because they have to recapitalize their insolvent banks. Okay? So, interest rates skyrocketed. We looked closely at Slovenia and saw that even if banks needed investments from the government's public debt, or the public debt wouldn't, spike that much. And it will spike moderately from a low level. So that was one trigger. The other trigger was that we saw that the business cycle in Slovenia turned around. The IMF predicted that GDP would fall almost 3% last year. We saw in October that the economy had turned around and was already picking up. And now, just recently, the actual numbers came out and GDP fell only 0.4% last year. This year they will have significant growth. And growth solves fiscal problems because growth means more income to businesses, to households, and that leads to more tax income to the government and less social expenditure. Okay? So Slovenia is going to service the debt, and now the market's perception is that indeed Slovenia is solvent. Slovenia is a good case. So interest rates have dropped dramatically, meaning that when I bought my bond, I got a very high interest rate, and now, since rates are low, the value of my bond has risen a lot. Okay? I still hold it because there is still a lot to go compared to German interest rates.